Good morning. Today I'm going to show you a few charts of the US technology sector with a focus on artificial intelligence and blockchain stocks. Then we are going to have a look at gold. Gold is one of the only charts which has been improving since last week, so I think it's worth having a look at it. And then I'm going to end with the head and shoulder pattern on the DAX 30. So that's a topic I started to develop last week, even a few months ago, and we are going to make an update on this as well. So first of all, here is the Nasdaq Blockchain Economy Index. So this is an index I showed you in yesterday's morning mail. So as you can see, a pretty bearish price action last week with the index breaking below the lower part of a major top formation, suggesting that the bull market, the strong bull market, we can even talk about a bubble, a bit like what we've seen on other markets like the Bitcoin last year. So it seems that the trend is starting to reverse after distribution process of around 1 year. So I see that as a potential quite negative signal, an indication that the de-rating of the blockchain sector is likely to continue in the, let's say, coming months, with targets on this index around slightly below 900 or even significantly lower, possibly back to 800, even slightly below. If we look at one of the famous ETF in the tech sector, this is the Robo US ETF. This one is also breaking down, so this is the underlying index behind this ETF. We can see that a kind of complex head and shoulder top with a breakdown seen last week as well, highlighting significant trend deterioration. And as you can see as well, the 200-day moving average is starting to turn bearish right now, suggesting a continuation of the correction, possibly back to Fibonacci support at 1,400, even slightly below. The downside risk, I think, within coming months is around 1,300, which is also the minor low here. One other chart looking quite interesting, this time with a significant breakout last week. This is the chart of gold. So as you know, gold made a very steep sell-off, which was probably due to capitulation from bulls on gold prices until August. Then after that, starting of a base formation. And last week we saw a breakout above an important resistance at 1,210, which is in the short term, I think, quite positive for gold, and suggests the start of, confirms, I would say, the start of a technical bounce to at least 1240, which is, as you can see, a significant Fibonacci retracement and also an important chartist resistance. But my favorite target zone is now the next Fibonacci resistance around 1263, which is also close, as you can see, to the declining 200-day moving average. So a high probability of seeing further rise of gold prices within coming weeks. Another technical element supporting the bull case on gold, this is the weekly MACD. So as you can see, a nice weekly MACD buy signal last week, with a first test of the declining weekly Bollinger Band here. I see that as an indication that the momentum of this market is starting to improve, with possibly further rise within coming weeks. At least it's becoming highly likely. If we look at gold mines as well, so this is the Philadelphia Gold and Silver Index, a quite encouraging bottom formation as well, with a reverse head and shoulder after a panic selling move earlier this year, so at the middle of the year during the summer. So it seems that gold mines, after panic selling moves, are indeed stabilizing and possibly starting a significant technical bounce. What is quite interesting is that the head and shoulder target has almost been reached very quickly. So I see that as a quite positive event. Of course, gold mines are not in a bull market, but I would favor a continuation of the recovery, possibly between 75 and the declining 200-day moving average around 78. We will end this presentation with the head and shoulder top I discussed last week on the DAX, so you can see it here. As a reminder, this pattern was validated last week. This is a major pattern which has been developing since last year. So it took almost more than a year, I would say, to develop this pattern. So the fact that we dropped below the decline, the neckline last week is quite worrying from a technical point of view, and this is obviously something that reminds me, as you can see it here, the head and shoulder top we saw in 2007 on CAC 40 with a breakdown. The breakdown was made with a Kerviel story at this stage. So it's I'm not telling you it's going to happen again and we are going to have a stock market crash or a 1 year bear market, but I'm just telling you that right now is a pretty risky situation with DAX possibly making an important top and validating a significant bear case. So as we can see in the past, we saw similar patterns, quite harsh technical patterns, and which were later invalidated. So I'm not 100% sure this head and shoulder will be valid. You know the story about head and shoulder, but let's say in terms of probability, the probability to start a deeper setback and possibly a longer correction is rising, obviously. Have a nice trading day and a good weekend.